Welcome to TipDB Finance, where I'm joined by currency analyst Neil Kimberley. How are you today, Neil?
I'm very well, Zach. Thank you for inviting me on. Thank you for ActivTrades to asking me to come on as well.
Okay, active trades and active FX markets at the moment.
Yeah.
Even overnight, it's just if you wake up and got nothing to do, there's stuff to do. But I mean, probably the story today is euro dollar flirting with 105.
Yeah, gone through 105, took it down to 104.97 in early London trading. Now hovering around the level. People reluctant to get too short at the low levels. You can understand that. I'd also throw out there that I think there's a lot of demand between 105 and 104.50 from European exporters. If you look at the forward points going out 2 or 3 years, well within their budget rates for a lot of companies, I would suspect there's good demand out there. People telling me a clear pivot is 104.55, which is a Fibonacci level. I'd therefore expect stop losses to come in around the 104.45, and that opens up, I'm told, on a technical basis, 103.50. But the key to this issue is they're not buying dollars, they're selling the euro. And you can see that both in the euro yen, which is trading below 119 as we're coming on air. Dollar yen's come down to around 113.20. Even euro sterling down, closed in New York last night below the 200-day moving average at 84.70. Clear break, number of people piling into euro sterling short this morning. If you want to be longer pounds, that's probably your best bet because cable still seems very heavy above 125. And also out there, euro Swiss hovering around 106.40. The Swiss National Bank, I imagine, doing a sterling job in preventing the Swiss franc firming up from where we are. And even outside that, big trades on there like the long oil position, which in the currency markets I would suggest is being reflected through a large euro-Norway short position. Euro-Norway trading below 880 this morning. Personally, I think that one's getting a bit crowded. I wouldn't be surprised to see that one bounce back a little bit.
I mean, as far as the atmosphere at the moment, it's still a slow ride. It's not a quick. There's no quick movements here. Even with the euro, there's no euro panic. Even though, let's say, Marine Le Pen looks rather nearer to being president than she was, let's say, last week. It's still quite orderly.
Yeah. The panic will come after the first round of the French election, between that and before the second round, because that's when you're going to start getting the volatility of people starting to get spooked. But you've got to keep, if you're looking at this from a trading perspective and you're looking at currencies, you may not like fixed income, but you've got to keep one eye on the 10-year German-France yield spread at the moment. Went out to 81, 82 basis points on Monday, the highest since 2012. You've also got to keep an eye on what's coming out of Greece, because it looks as if the Euro group is basically waiting for Greece to run out of money so they'll sign a trade. The yield on Greek papers edging up again. Italy, Mr. Renzi's now resigned from the PD. That's going to put the whole thing in skew again. And you just get the feeling that the marketplace is comfortable being short of euros. And it's not as short as it was last week because the CFTC data has shown that. And instead of going, yes, yours, euro, dollar, because we have uncertainty about the United States, and don't forget we've got FOMC meeting minutes out tonight, people thinking they might be more hawkish on the dollar. People are not so focused on euro dollar per se, but they're spreading the risk out into some of the crosses that I mentioned earlier on.
I mean, it's also slightly vulnerable to some kind of Trump tweet which says that the dollar's too strong against the euro, or the euro's.
I think from the Trump perspective, you saw Mr. Mnuchin overnight spoken to Christine Lagarde. He wants the IMF to focus on currency manipulation. A guy I speak to in the States said to me last week, it's impossible for someone in the States to think that Gary Cohn and Steve Mnuchin are going to be in favour of a strong dollar policy. You could argue the same for the early years of the Reagan period, but if the dollar is the best looking horse in the glue factory, it's going to be the beneficiary anyway. And as regards Mr. Trump, he is a player. He is going to be doing the State of the Union address on the 28th of February. My guess is he will keep a lot of his ammunition for that, and then he's going to unload in front of the two houses of Congress, and we will see what he wants to do. But I'm less concerned about what's going to come out of the United States over the next couple of weeks in terms of dollar negativity than I am in the fact that anybody in Europe who opens a newspaper or watches the television can see there are more reasons to sell the euro than buy the euro, and they're doing it across the board. It's euro weakness.
The other thing that stands out, you said that the best way of playing pound strength is probably to go short of euro sterling, but the pound dollar itself is dead as a dodo. I mean, what's happening?
Yeah, I mean, if you think about it, the pound is not trading like a European currency per se. It's trading like a North American currency. The cable is fairly stable. Now, we've seen this in the past. I think it's going to become more pronounced once we get Brexit out of the way. But if you like the big dollar, you probably like the little pound to an extent, because they're coming from the same angle. And then in comparison, you've got the Eurozone where we've got all these other issues. And don't forget, we are in Europe, but we are not of Europe anymore. And if you're a central bank around the world, you can categorize the pound now as a mid-Atlantic currency, if you will, North American, or a European currency. If you categorize it as a North American currency, and many in Asia have done this for years, you can add sterling to your reserves at the expense of US dollars or Canadian dollars in comparison to the euros. And you can spread your North American risk by recategorizing the pound as a North American currency.
Sterling, so the British pound is like the Canadian dollar, basically. It's just that type of...
I think there's an element of that, and I think some of the banks have been saying this could be the end of sterling as a reserve currency. I beg to differ on that. The further we get from Europe post-Brexit, common law in the United Kingdom, all the strengths that come with the British system, I think you might find a tick-up in the amount of sterling that's being held once we've secured the deal with the EU, which will come because it's in everyone's interest.
Kimberley, currency analyst, thanks for coming in today.
Thank you for having me.
We know there's a big world out there, free from boundaries and constraints. It's connected, yet separated by distance. It has the instinct to adapt, evolve, to thrive. There's a big market out there. Embrace it with ActivTrades.